So today we want to look at letter of engagement. So normally audit firms, they have to, or any other business basically, any other business must have a contract. So letter of engagement, just like an agreement letter or contract document. When you win any tender or any job, you need to have an agreement that is written down, showing the terms and conditions of that particular document. This is an area that always comes in exam in different ways that you might not expect. So what I'm saying here is that it's very important to understand the content of the engagement. You need to understand the content of engagement. So for every kind of business, it could be for audit services, it can be for bookkeeping or tax services, or for system review. Both of them must have a contract. So the process is, the auditor will apply for an audit job, then he will win the tender. After winning the tender, the client will send him acknowledgement or congratulation letter, which says that you won the tender and you've been appointed as the auditor. Now, in that particular case, that means that he's now ready to start the job as per the requirements of the client. So now he needs to respond on that letter of congratulation. The auditor will respond by giving an acceptance letter which contains his conditions. That letter that the auditor will write to the client is what we call engagement letter. It comes from the auditor. So you need to know these kind of letters. We have letter of representation that we discussed in our earlier class. That one comes from the management to the auditor, where the management represent themselves or give a surety, they give a surety on the figures or on the claims, on the financials. That one is called letter of representation from the management to the auditor. Then now we have another letter called letter of engagement. This one comes from the auditor. It only contains terms and conditions of the engagement. Engagement here means the job that you want to do or the contract, the activity that you want to undertake. That is what we call engagement. It can be bookkeeping, it can be tax services, it can be HR. Those are engagements. Then we have another letter that we discussed yesterday or a day before yesterday, that is called management letter. It is also a letter from the auditor to the management. It's called management letter. A letter from the auditor to the management indicating the findings, what you got when you are working. So we have three types of letters. Management letter comes from the auditor. It has findings on the issues that were found on the ground. We were able to see that in our previous class this week. Then we have another letter that comes from auditors called letter of engagement. Sometimes we call it LOE. LOE. Now that is what we want to look at today. In exam, they will ask you, what are the contents of LOE? That is at intermediate level. They will ask you, what are the contents of LOE? Or they can ask you, what are the reasons? What are the benefits? What are the importance of LOE? Such questions can come. In advanced level, they will pick and a line from LOE. They will pick one of the functions. Then they ask you, and that is why earlier yesterday, I sent you a document that shows the responsibility of the auditor and the responsibility of the client in financial audit process. And of course, I also sent in terms of forensic audit, what are the responsibility? Those are things that will be contained here. Now at advanced level, they will go a little bit higher, not to ask directly on the content, but they pick one of the content. They want you to expound on that particular content. And that is how the examiner set the question. That can be 10 marks. So let me give you a sample of LOE. I want to give you a sample of LOE so that when I explain to you the functions or importance, you can easily understand. Are we together? I want to give you a sample of LOE from our firm so that you can see how it looks like. So this one is a sample of LOE, or letter of engagement. Normally, it has some details. So if somebody asks you about content of LOE, intermediate level, they can ask you that. Now we want to look for them from here as we state. So content of LOE or letter of engagement. The first content, we can see the name and address of the audit firm, right? Or you call it practitioner. So that is one thing. Practitioner is the audit firm. But if you feel you have more points, you can just say name and address of the engagement team. That means that you're talking about the audit firm and the client. But if you don't have points, you can split them into two so that you have 1 point for details the client and another one for the auditor. So we have number 2, name. So we have another one, name and address of the client. Na hizo tumeona, si ndio? We can see name here and address of the audit firm. We also have name and address of the client. We have this one and then the address. The next content is the title of the subject matter or title of the engagement. This one, this is the title of the engagement. Unaandika hiyo. So that one shows the kind of engagement that we are undertaking. Those are contents. Tunasonga pole pole like that. Haya. The next thing, look at some of the content here. It says, the purpose of this letter is to confirm that we have accepted appointment as an auditor, as auditors of your church for the financial year ended 31st December 2020. To set out the basis on which we will act as external auditors for the church and the respective areas of responsibility. So understand here the basis on which we'll act. Number 2, we talked of the year of audit. So basically, what we are talking about here is the year of audit, and, or you can say the period for the engagement and the scope. The scope, meaning that we are going to do external audit and their basis. Those bases will show us the scope under which we are going to get engaged. So the scope. The scope of engagement. Scope can be the areas to be covered and even in terms of a period. For example, external audit, we know an audit can be external audit, can be statutory, internal audit. It can also be maybe something like compliance audit or forensic audit. So those ones must be well explained on the letter of engagement. You need to know which kind of engagement are you talking about. If it is compliance, you have to indicate which area are we going to inspect to check whether the client is complying. For forensic, you have to indicate exactly what area, is it on payroll or on procurement? Now, That means that we also need to know the nature of engagement. So we have number 4 here and number 5. Number 5 is the nature of engagement. The nature of engagement here is external audit. External audit. But the scope is for only 2021 in terms of the year. But of course, under basis, we'll know what are we going to cover. Another thing that we can see there, responsibility of the two teams. These are the people that we call engagement team. The team from the client side, they are called directors, and then the team from the audit side, which is called the auditors. So we have responsibility of the engagement team. So you can say responsibility of the client and responsibility of the practitioner. Are we together until there? Up to there, are we together? Are we together up to there? Just comment very fast, then we move on. I don't want to be talking alone. Okay, so let's scroll down. So we have seen that we are going to illustrate responsibility for each party. What else do we have in this document? We talked about the scope. This one we have indicated. The scope of engagement must be indicated. Like now here, we have to say that our audit will be conducted in accordance with international standards. And we are going to include such tests on Apple. We are going to include such tests of transactions and other, and of the existence, ownership, and valuation of assets and liabilities as we consider necessary. We shall obtain the understanding of the accounting and internal financial control system to the extent necessary in order to consider their suitability as the basis for the preparation of financial statement and establish whether adequate accounting controls have been maintained by the organization. That is what we are going to do. So that is our scope. Those are areas that we're going to look at. Those are our scope as external auditors. So we have seen scope. Let's scroll down. Management representation. You can put a clause on management representation. You can add there the clause on management representation. Then another content that is important, use of facility, whether you're going to use the client facility. Like in this case, you might be working on client side and you might request them to help you with the Wi-Fi or even tea. When you are working there, you are telling the client, can I get some cup of tea? Can I get a laptop designed for us? Can I get a system so that I can be able to perform my test using your system? Those are client facilities. So you want to indicate on the engagement, as an auditor, you put conditions, you put everything that you might want. Mimi nitahitaji hii na hii na hii. You need to put them there. So we are saying it also contains the client facilities that the auditor might use or resources. It contains resources that the auditor might require from the client. So we have those resources as well. I hope you've written that. Let's go down. You can also indicate basis of preparation of report because there can be different reports. So the auditor needs to indicate the basis that he's going to prepare his report, basis of preparing report. It can be different reports. It can be tax, it can be HR, it can be bookkeeping. But if you have to give any report, then you need to show how you're going to prepare that report. Another thing is audit fee. It is in this document that we indicate the audit fee. In this document. So I write there that it also contains audit fee and other disbursements. Audit fees and other disbursements. Then under audit fee, just beside it, put star. We are going to talk about audit fees shortly. Put a star. Audit fees, put a star. We are going to discuss that and other disbursement. We also have confidentiality clause. You can write that. That is also part of the content of engagement letter. Confidentiality clause. Confidentiality clause. That is also another one. We have an acknowledgement clause. The auditor needs to acknowledge by signing the document. So we have acknowledgement, and this is what the auditor is going to do. The auditor will sign here, the client sign down here. The auditor will sign here, the client sign here. So we have acknowledgement clause. Now, those are basic contents of engagement letter. It basically needs to contain the conditions under which the assignment will be done. This is the fee, this is my scope, this is my responsibility, this is the resource that I might need, and this is the surety that I can give in terms of confidentiality. Are we there together? Are we together up to there? Na kawaida una respond haraka haraka ndio tusonge. Are we together up to there? So it means that we are not together. So what is the question? Oh, Nicholas has said that you're together. So thank you very much. Ruth has a question. Please go ahead, Ruth. Umebeba mkono, just say something. Can I unmute you? How do we answer the side of LOE when asked? We are coming there. The question that they will ask you under intermediate level, they will ask you for the content. But even in advanced level, they sometimes can ask you for the content or benefit. Now let's come to the benefit of LOE. It's fine. So let's look at benefits of LOE. Yesterday I had some good pens, but today they disappeared. So let's look at the benefit. Now that we have seen what it contains. Number one, we can agree that this LOE shows the terms and conditions of engagements. That is one benefit, or one reason why we have LOE. The first one is that it shows the terms and conditions of engagement. When you are asked about the content, you just need to highlight. For example, you say scope, then you explain. It has the scope. It shows the scope of the engagement, then you explain areas that you are going to cover, and also maybe the period. Then another one, responsibility of both the parties. Then you explain a little bit. Just say that every party has a responsibility. For example, the auditor's responsibility is to do this and this and this, and for the partners or for the client is also this and this and this. Then you go to audit fees. Those are contents. The audit fees must be well explained. The auditor needs to explain on the engagement letter the basis under which the audit fee has been charged. That is another explanation. You talked about the title of engagement. That can actually show anyone what the engagement is all about. You know, so my own, that is something that I don't think it can be a challenge. I don't think it can be a challenge. Confidentiality clause. Then you explain that being that the auditor accesses a lot of information, he needs to give surety that he will keep the client's information confidential. Equal to, just like that. And you get your 10 marks. So we are looking at the benefit. One of the benefits is that it shows the terms and conditions of engagement. Or it indicates, or it contains. That's number one. Number two, it is an indication that the auditor has accepted his appointment. The auditor was appointed, he has been congratulated. He replies by giving LOE. So it is an indication that the auditor has accepted an appointment. Again, by signing that particular document by the two people, it shows that every party has read the document and understand their responsibilities, and that is why they are signing. So you can say in exam, it contains the responsibility of each party, or you can simply say it is an evidence that every party understands their responsibility. The next one, in fact, the first point you can even leave around. This one, terms and conditions can be general. It can finish for you the marks. You can actually go through the document the way we have it, then pick points from there. The next one, it indicates the basis under which the audit fee has been charged. That is also an advantage. I want to show you an example. This one didn't have the basis. Yes, it shows the scope of the audit. Yes, that is also another one. I want to show you a good example which indicates the basis under which the audit fee has been charged. Okay, so like this one we charge audit fee 140, and as you can see, it indicates some conditions that our fees are generally based on times put in during the course of the assignment and the level of responsibility we carry while presenting report to the appointing authority. The fees usually proposed are competitive but realistic, designed to ensure that there is no compromise in either the quality of the work done or the client service received by the organization, or client service received by the organization. So as you can see, in this particular one, we're able to put some of the basis. We are trying to explain to the client that the fee that we're charging you, number one, we consider the amount of work that we're doing. Number two, we also consider the time we are going to spend on it. But also we consider the market rate. That is why we are saying it is competitive and realistic. We also consider the market rate. But again, we also ensure that that fee does not cause compromise on our work, does not affect the quality. You remember, if I did with you introduction classes, we talked about some of the reasons why audit fee is very important, where somebody can have what is called lowballing. You charge so little fee so that you win the tender, but that fee that is little can actually compromise your work. You not have the energy to finish the race. So the audit fee should not compromise the work. So we have actually indicated the basis under which the audit fee is charged. So it indicates the basis under which the audit fee has been charged. Number two, under audit fee, we also have some conditions here. When you are putting audit fee, you need to indicate whether it is VAT inclusive or not. You need to indicate whether the rate of VAT is 16% or 14%. But again, you can also indicate whether you want to be paid 50% before you start, or you need to be paid everything after you are done. Somebody can say that you pay half now, then pay the rest later. Here, we were silent because we trusted the client. If you don't trust the client, you can insist the client to pay you 50 first, that is a half first before you start, and then a half later. That is something that you'll indicate on this particular document. It contains confidential clause. Yes, you can explain that. So basically, when you are asked about the importance, you need to show what the content is and the importance of each content in that particular document, in this particular LOE document. So, okay. Another advantage of this particular document is that it can be used for future reference. In case somebody wanted to confirm whether you are appointed or wanted to check the terms and conditions of the engagement, it can be used in the future for future reference. And even you, when you are quoting some other times later, you can check how much did I quote last, what am I quoting now? So it can be used for future reference. Another thing, it is also an evidence that you are legally and appropriately appointed as an auditor. You remember from the first sentence, we say that we accept your appointment, meaning that you are appointed. That is why we are accepting. So it is an evidence that we were appointed and appointed appropriately. So those are contents. Those are contents. In case somebody comes in court and asks, how comes you are doing an audit? Were you appointed? Then you can say, yeah, we were appointed. There was LOE that even contains the conditions under which we were able to engage ourselves. And that LOE was signed by the two people. So don't accept any appointment or start any appointment without the client signing LOE. That is the proof that the client has accepted the conditions that you gave, the conditions under which you are going to operate. Without that, the client can not pay you, and the client will say that there is nowhere to show the conditions that we agreed on. We didn't make any agreement. Sasa wewe utaenda wapi? Utakuwa mgeni wa nani? When client refuses to pay you after doing the work. So those are some of the things that we might be considering here. Though in audit, we don't want to go that far. We don't want to even end up suing the client. If the client doesn't want to pay you, you don't want to take the client to court for a lot of issues. Sometimes just let them be. As professional, you focus on most important things and protect your name. Sasa, Mayom, now I've given you the points. How will this document for my client help you if I send you? This one is confidential document for my client. If I give you a copy, does it help? I'm only using it for reference. And of course, I've given you the most important points. Well summarized. Sawa. That document is for client. That is why it looks well summarized. So you have seen the importance or reasons why we did LOE. Let's now go to audit fees. Audit fees. What are the importance of audit fee? Why is it important to always be concerned when you are setting audit fees? So, factors to consider when setting or coming up with audit fees. So the first one, we are saying that you need to consider the amount of work that you're going to take, the quantity of work, the volume of work. Number two, you need to consider the time that you're going to spend when you're doing that particular work. Number three, you need to consider whether there was need to involve an expert. If you are going to involve an expert, of course, you have to put his fee inside that engagement. I am saying, kama hiyo kazi yenye unaenda kufanya, it will force you to look for an expert like engineer or surveyor. Remember this surveyor you are going to pay, or engineer or doctor. Put his fee inside when you are putting, quote when you know very well that it is inclusive of the cost for bringing an expert on board. So this one, any other indirect cost in bracket disbursement. So you need to consider again, disbursement, those are other factors that you include, like maybe transport, food for your staff, accommodation. Those are things that printing and something like printing, printing or type, printing, maybe you need something like printing, you need network, maybe you're going to client site, they don't have network, so you have to look for a stronger network and use when you are there, like bundles. You also consider even airtime that you're going to use during that time when you are consulting, calling. Okay, so that is what I mean. I think, Mayomi, you're not seeing here. So the first one, the volume of work or amount of work that you're going to do. The second one is the time spent on the engagement, amount of time that you're going to spend on engagement. The third one is whether the engagement will need an expert or not. If it is going to include, it will need an expert, you put. That is number three. Whether the engagement will need an expert or not. Number four, any other indirect disbursements or cost, any other indirect cost like transport, accommodation, internet, printing, communications, those are the ones that you put there. So I hope it's okay. That is okay. Another thing that you might consider, is the age of the client, the age of the audit firm. Some audit firms are too old. The ones that are old, like for example, KPMG, the way they are quoting might be different from maybe another small audit firm along Kirinyaga Road here. A small audit firm along Kirinyaga Road here might charge maybe J and K associate. Yeah, they are very young. They are going to do the same work, but you are going to charge a small amount of fee. Now, those are things that you need to consider as you quote fee when those ones are already. You consider the age of the audit firm or experience of the firm. You consider the experience of the firm. Just 1 minute. I'm sorry, 1 minute. Let me receive a call here. Somebody has been calling. So somebody is asking, Nicholas is saying, what is the, Nicholas, can you say something? Capability of the client? No. You know, so as long as we are looking at the amount of work that we're going to do. So with us, we don't care whether you are not able to do it. Because again, that amount of work means that if the amount of work is too high, that basically means that even you should be making a lot of money. You can't tell me I'm going to audit, for example, if it is a bank, I'm going to audit a bank that has 20 branches. Then you are telling me that you're not capable of paying me while you are running 20 branches or supermarket, something like that. You need to be having money. The good thing, let me tell you the secret. One day when you become an auditor, go for these companies that are quite serious, especially the ones that are like corporations, not personal, corporations. Those guys budget for that audit fee. And most of the time, you will find that the people who are managing are not the owners. Once it is budgeted, they don't have a problem paying. But you audit somebody's company, alafu malize tu hivi. Kwanza, they don't even see the importance of audit. They are seeing that they are the owners, they are there. Number two, wana feel hiyo deni wakitoa ni chungu. They didn't budget for it, and they don't even want to pay that thing. So wakitoa ni chungu, they don't want to pay. Most of the companies who are running audit firms, most of the people who are running audit firms and specializing on individual audit or individual corporates or private companies, they have issues. A lot of money is outstanding. A lot of money is outstanding without being paid. So kuna madeni mingi huko nje. Those people don't pay. You go to companies like maybe corporations, you go to SACCOs, you go to banks, Mazei will be rich within 2 years. I can tell you. Those people they have actually budgeted. The CEO only tells you, come on this day, we start, we pay you 50% on the same day. Yani una report asubuhi na unapewa check ya nusu ya audit fee. So we don't care about, when we are setting audit fee, we don't care about your ability to be able to check. Regulations only says, in fact, Apple, there is a problem there. Regulators don't even tell you how much you quote. They only say that you should not put a little fee that can actually compromise the quality of your work. That is the only thing they are saying. You should not be able to set a little fee that can compromise the quality of your work. So, but again, they are also telling you, you don't quote too high. You don't quote too high, maybe the one that can actually maybe like now you are stealing from somebody. You don't quote too high. But they are not saying how high is high. There's a quotation that we did with my former employer. My former employer quoted 750. The same client, KPMG, quoted 1.5. So you see, this is basically a half. They don't tell you how high is high. So we won the tender. These guys are budgeted for 1.2. But now, after seeing that we were cheaper, we won the tender. There were a lot of jobs that we were doing. There were a lot of work, but we sacrificed because we were seeing this is one of the bigger companies that we're now auditing. So we decided to sacrifice ourselves. There are a lot of work that we even regretted in the course. So the client was also asking us that, are you sure you're going to finish this job? Tukamuuliza kwa nini? And you know you are not even our class. With us, we budgeted 1.9, 1.2. We expected PKF, KPMG, PwC, not you. But we told them, okay, you've given us a job, let's do it. We managed, we did a good job. We were even appointed again. There was a reappointment, but now during reappointment, we adjusted to 1 million. So what is happening? In this case, my partner could have quoted 750 just to win the tender. But a year after winning, you realize that you cannot even maintain. Again, currently, we are dealing with a client that is in Iten. The client is in Marakwet. The current auditor quoted 250 audit fee. Not knowing that the previous auditor was quoting more than that. The previous auditor was charging 500. Sasa, when they went to do the job, the client even opened 2 more branches. So you quoted this, the previous auditor was putting this, the client has actually opened 2 more branches. Now you start crying because there are a lot of work that you cannot do. So they are telling you, before you do your due diligence, know what are the previous auditor quoting? What is the market rate? What is the risk that is involved? In fact, risk is also another thing that you need to consider. Risk involved. When you're putting audit fee, don't forget about risk. It could be a small job. Like there's one that I actually avoided. The client called me to quote, but then I quoted a high fee that he could not afford because of the risk to Kachana Nairo Safi. The client is in Mombasa. They have never done audit for the last 10 years. He's doing business. Accounts are not kept. Fraud happened. So the court told them to go and give audited account that shows that really there was this much that was stolen. So I'm coming to audit, give you statutory audit, backdating, so that at least we can show that 2019, 2020, and 2021, these were the financials and fraud happened. You know, at that level, I'm like, now I'm going to do forensic audit indirectly, though I'm giving you statutory audit. Because after getting that report, you never know. The court can now tell me, do forensic audit. How do I even do that audit when you don't keep records? I actually quoted a bigger fee so that he can avoid me, he could leave me alone. So the risk involved is very important. So that is another thing that you need to check risk involved so that you don't quote a small fee. Number 3, does it mean audit is done even if one is not an expert? With number 3, where the engagement will need an expert? No, it doesn't mean like that. It only means that you are the practitioner, but you might call somebody who is an expert. An expert is somebody who has knowledge in a different field, not in audit. So experts here, we are referring to people like engineers. Remember, you're auditing something like SGR and you don't understand about it. You call engineer and ask them, what is the cost of this? How do you call this? So that when you're giving your report, people understand that you are knowledgeable. You mention those things with their names. You don't just go around the bush. You quote that this one should have been this one, you know them. Those are the experts. So I think we'll stop from there. Ama, kama jana, I can proceed kidogo, then I share a video. What do you prefer? Can we proceed kidogo, then I share a video? Just reply, because I've looked at now some of the things that you need to consider when you are quoting audit fee. I want us to look at briefly responsibility of management in audit and also the responsibility of the auditor. I shared the notes in advance because I knew we were going to cover it. So that is another area. Remember, under the content of engagement, we looked at responsibilities of each party. Now let's look at the responsibilities briefly. Then I'll share the video. For those who are busy, you can just exit. I'll be able to give you the video. Only responsibilities. I've given you the notes. I'll just add you the video. We have them. I think I have them somewhere. How comes they're disappearing? So in exam, they will ask you, can you give us the responsibility of the auditor when it comes to audit of financial statement, the normal financial statement? So they will ask you a question. Discuss the responsibility of the practitioner or the auditor in a normal financial statement. We have financial statement audit, which is kawaida, and then we have other special engagement like forensic. So they can as well ask you the responsibility of the auditor in forensic engagement. So this one are the notes that I gave you that you can be able to see. The management responsibility in relation to the financial statement, including the following. They include the following. Those are responsibility of the management that we were talking about. So the first one, the management in a normal financial audit, the management has the overall responsibility for the preparation and presentation of the financial statement. That is their responsibility. To prepare the financial statement is not the responsibility of the auditor. It is the responsibility of the management to prepare and present. The auditor only comes in to check. Once those financial statements are being given to them, they check, then they confirm, they come up with an opinion only. But in some cases, you might find that they end up asking the auditor to come and assist them draft or prepare the financial statement. So. Number two, identify financial reporting framework. We talked about GAAP and IFRS yesterday, and we said that you need to come up with applicable financial reporting framework. And so the auditor only comes in to check whether you are actually using those frameworks that you identified. The management should identify which one they want to use and then use it. So once they have done that, the auditor only comes in to check whether they're using that one. We have designing, implementation, and maintaining internal controls. Designing, implementing, and maintaining internal controls relevant to the preparation and presentation of financial statements. So the work, responsibility of maintaining, designing, implementing, and maintaining internal controls to ensure that they work effectively also lies with the management, not the auditor. The auditor only confirms whether the controls are there, whether they have been designed, whether they are implemented. You know, you can design control, but you don't implement. And some of the reasons for not implementing controls because of maybe the attitude of the management or lack of goodwill. They don't want to cooperate. Selecting appropriate accounting policies. And of course, they also have estimates. Like now, what is your policy when it comes to disposal of items? Fixed asset, when you want to dispose, what is the policy? Maybe what are the policies or procedures that you follow? What are the policies that you use when you are doing calculating depreciation? We have so many methods. There is reducing balance, there is flat rate, there is sum of digits. So you need to decide and ask yourself, what policy are you going to take as a management? So the auditor only comes and checks, where is your policy? It is this one. Then we confirm whether you are using it in your own company. You have the policy and then now actual use of that, execution of that policy. Making accounting estimates that are reasonable. So estimates like provision for bad debts. Like yesterday we talked about contingent liability, a case in court. How can you estimate the possibility of loss so that you can actually cater for it? So those are the things that we're talking about. Now, those are the responsibility of the management. Another responsibility here, number 6, they have the responsibility to give disclosure of all the information. They need to give the auditor all the necessary information. That is another responsibility of the management. So when they ask you, state the responsibility or discuss the responsibility of the management in a normal financial audit, that is the audit of financial statement, then you know these ones. These ones. But even the same responsibility applies in forensic audit. Some of them also applies in forensic audit because they will be asked about the internal controls. It is the responsibility of the auditor, the management, to keep internal controls. So that one will apply even in forensic. But let's proceed to the auditor's responsibility on the same scenario, up or there. Number one, the auditor has a responsibility to do what? To assess. They have the responsibility of risk assessment, audit risks, and audit procedures. They need to perform audit procedures. So number one, they need to assess the risk. They audit that risk and perform their normal audit procedure for identifying those errors. So they need to identify the overall risk of material misstatement in the company's financial statement. That is the number one responsibility. If they fail to do that, to identify the errors and misstatement or risk basically are the errors and misstatement. That is the responsibility. If they fail to do that in a reasonable way, then they can be sued. That is where the case comes to court, where we say they have been sued by a third party for negligence because they forgot about their responsibility to the client. This one is responsibility to the client, and of course, also responsibility to a third party. The third party expected you to have identified the errors and tell them the truth. The client also expects you to do that. The next one, in a normal financial statement, the auditor has a responsibility in terms of internal controls to check internal controls. The auditor doesn't have to implement or design. The auditor responsibility of the auditor is just to confirm whether the controls are working or not. So the auditor is also responsible for obtaining an understanding of the internal controls that are present, whether they are relevant, whether they are working, and then express his thoughts regarding the organization's internal controls. That is his work, only to check and give a confirmation or a report on the same. The next one, accounting estimate. When it comes to accounting estimate, the auditor has a responsibility to check whether those accounting estimates that the management has used are reasonable. Like now, the one that we're talking about, you are estimating that this is a bad and doubtful debt. So we are going to cater for it, we provide for it. So that is what we are going to do. Like yesterday, we were saying that they had bad doubtful debt, but they underprovided. So meaning that when the auditor tests the estimate, they realize that those estimates were underprovided. So then audit conclusion, they have a responsibility to give a conclusion audit report. They have a responsibility to give conclusion. They also have a responsibility to check the presentation and fair disclosure. They need to check that the management has presented the report the way they should, and they have disclosed all the information that are required. So that is their responsibility. They need to evaluate the overall presentation, structure, and the content of information that has been given to him. That is a responsibility of the auditor. So we have 5 responsibilities. In fact, the best thing, you need to understand the responsibility of the management. Now the one for the auditor is only to check them, to confirm them. So you just say confirm, to check. Yeah, that is the wording. The same responsibility of the management, but now on the management, there were execution or identifying and implementing. But on the auditor, to confirm, to check. Sawa. Okay, so let's go to responsibility of the auditor. On internal audit, I know you know the responsibilities, these ones. Responsibilities of internal auditors are like provide recommendations to improve weak internal controls. They need to check whether the internal controls are weak or strong. Whether the controls are weak or strong, then they provide recommendations. They have the responsibility to investigate fraud where fraud is suspected. They have responsibility to check reconciliation. They can also help in performing, but in most cases, they will be able to check whether reconciliations have been done. They have a responsibility to monitor compliance, whether the company is compliant with the statutory requirements. That is the internal auditor. They also have a responsibility to evaluate the processes and procedures that we are using in our operations and whether those procedures are functional or they are appropriate. That is it. Under forensic, we talked about definition of forensic, and now the role of forensic, the role of auditor in forensic engagement. we have seen the role or responsibility. Here is the responsibility of the auditor in a forensic engagement. So the first one, he has a responsibility to investigate. That one we discussed, collect evidence, and the ways in which the auditor used to collect evidence in a forensic are the same way. You perform substantive tests, use analytical procedures or software. Software, we say audit software. Now, data test data, we talked about this, that there are computer software that auditor can just inject in the customer system and will be able to give you information that is looking for. So that is the audit softwares. Those ones will be able to help. There are programs that will be able to detect any fraud and errors that exist in the system. They also check the internal controls. They also do interviews to know what is happening. They check the weaknesses, internal controls, and also do interview. So during execution process, these are the things that they do. And during execution or evidence collection process. Then now we have the other responsibility of the auditor is to report. He will report findings while giving evidence. And of course, after that, they will go to court and testify or act as part of the witnesses. Those are the responsibility of the auditors in forensic audit. So in exam, they can give you that, be careful. Tomorrow, I think we can look at one of the past paper questions on the same. And tomorrow we don't have a class. Okay, so tomorrow there's no class. So do me a favor. Do you guys feel that we should continue with these classes next week? Do you feel that we should continue with the revision next week? Should we? Okay, so if we are going to continue, then now, pesa yako imeisha leo. Your hundreds for the week is finished day. It ends today. So you're going to start again. I'm not going to remove you from this group. We're going to use the same group, but just pay so that you maintain for our week, Monday to Friday. Over the weekend, we'll not do them. We have so many classes over the weekend. I can't do this. It will not be fair for you. Sasa. Yes, past paper will do. You know what I didn't want to do? Some of you do not have information on this. So if I just start on the past paper direct, it will be wrong. If I start management letter, somebody doesn't even know how it looks like. We'll discuss the whole management letter, but these are questions that we can get. I can show you some of the questions that have been set on the same in group. I'll share with you in group the years that they have set the same questions. And even the paper that we were looking at yesterday, there are questions there. So I'm going to quote for you a few past paper questions in the group that you can refer to on what we've covered from Monday to date. So next week, let's continue. Mjipange mapema. Let's pay for the whole week once, 500. Ndio tusitoe wengine. You know, sometimes you keep on reminding somebody, pay. It's quite difficult. So you can start paying today for next week. Yeah, the approach is okay. I'll share with you past paper. But of course, one thing that also don't fear, another advantage is, now that you have the content, when we come to our normal classes, like now in advanced level, we are going to meet today. Tutamaliza syllabus either today or next or Sunday. Tukimaliza syllabus on Sunday, for example. We'll now start revising. When we are revising, you'll easily understand what we've covered already. We'll just be going to past paper direct, na wewe unaelewa vizuri. Sindio? Sawa. So let's meet in our normal class today, then over the weekend. Monday, this group will continue, lunch hour class. Thank you very much. See you. Start paying for lunch hour. Thank you very much.